Hello friends, I am CA Mandar Joshi from BG Baliga and Company, a chartered accountancy firm specialized in audit and taxation established in Mumbai. Today, I am going to talk about which ITR an individual or a businessman should file. Many times our client asks us that which ITR they should file because they have so many details and so many varieties of income that they get confused. And of course the number of ITRs is more than 6, more than 7 rather. So today I am going to explain about which ITR is applicable to which category of person or which category of income. ITR 1 or Sahaj is the most simplest and shortest income tax return form. It is needed to be filed by individuals who are earning salaries, who is having income from house property, and who is also having income from other sources. Now, income from house property can either be the rental income which is generated from their rented out house property, or it can be the interest which is being paid by the individual on the housing loan taken by them. Other sources of course include all other income which is not covered under salary or house property or capital gain or even business. So the individuals who are earning through these three specific sources of income, that is salaries, house property and or other sources, are required to file ITR 1 or Sahaj. ITR 2 is another form which is meant for individuals who are earning income through various means. Number 1, salaries. The one who is earning salary income or pension are supposed to file ITR 2, or who is having income from house property. Again, even the interest which is deductible or the rent which is earned has to be entered in ITR 2. Income from other sources, capital gain through the sale of any immovable property or security, shares, mutual funds, they should also use ITR 2. If you are a director in a company, then ITR 2 is applicable to you. If you are having any foreign income, if you are owning assets, if you are having any foreign income or you are owning any asset outside India, then also you should file ITR 2. If you are an agriculturist and if your agricultural income exceeds more than 5,000 rupees, then ITR 2 is applicable to you. So all these circumstances trigger you to file ITR 2. Coming to ITR 3, ITR 3 is supposed to be filed by the individuals who are either partner in any partnership firm or who are a director in any company. Now, if you are an individual director in a company or a partner in a company or even individual members of an HUF also need to file ITR 3. The return may include salary or house property, other sources, or even capital gain from unlisted or listed equity shares. In short, individual or HUF who are not eligible to file ITR 1, ITR 2 or ITR 4 should file ITR 3. ITR 4, or also called as Sugam, is required to be filed by the businessmen or professionals who are declaring their income under the presumptive taxation scheme, that is under section 44AD or section 44ADA. Also, individuals who are earning income through salary or pension up to 50 lakh rupees, income from one house property which is not more than 50 lakh rupees, are also supposed to file income tax return in form ITR 4 if they have income from presumptive taxation or if they are declaring income under presumptive taxation 44AD and 44ADA. Remember, 44AD is applicable for businesses and 44ADA is applicable for professions. ITR 5 is for partnership firms, limited liability partnerships, association of person, body of individuals, artificial juridical person, estate of disease, estate of insolvent, and business trust or investment fund. ITR 6 is applicable to the companies, private limited or public limited, companies other than companies which are claiming exemption under section 11, that is NGOs or charitable organizations, ITR 6 is applicable to all those companies. ITR 7 is meant for trust, NGOs, charitable organizations, and also for the companies which are registered under section 8, which is again for the charitable purpose. ITR 1 to ITR 4 are supposed to be filed before July 31st if the tax audit is not applicable, and if the tax audit is applicable, in that case the due date for filing return extends up to October 31st of the assessment year. That means ITR 7 for trust and NGOs, ITR 6 for companies, or ITR 5 for LLPs and partnership firms. The due date for them is October 31st, and for the rest of the assessees, the due date is up to July 31st. If you miss the deadline to file your ITR, then you again have the chance to file the same up to December 31st of this year. But if you miss that deadline also, then you will have to file ITRU, which is subject to many conditions. Hence, please make sure that your ITR is been filed well within time. Hope you learned something new today. Mind your money.